Hold the phone. Whoa! GameStop. Trading halted. What's going on? Two things before I begin. I'm not a financial advisor. Everything I say on this video is just my personal opinion. Always seek professional advice when investing. And second of all, make sure to hit the subscribe button. And if you do end up enjoying the video, make sure to hit the like. Impromptu video here because just flashing on my screen here, just announced trading halt on GameStop. Now, normally when a stock spikes, you won't see some of the normal system halts kick in. But here is the problem. Over 138% of GameStop shares are being shorted. So this is a major volatility mark, which is why the New York Stock Exchange stepped in to halt the trading of the stock to try to level out some of this craziness. Let me just say this, guys. The chickens have come home to the roost for these poor short sellers. And rightly or wrongly so, this is insane. It really reflects the current speculative retail investing that's happening with stocks. As a person who has been building their investment portfolio for the last 20 years, I've been part of some crazy markets. And I have to admit, there have been times where, a good news report would come out, but yet the stock was still drop. And it could be a combination of reasons. But most often not, it was an analyst didn't like that Apple didn't sell an extra phone, or they didn't like this, or Wall Street traders had a different plan for it, and they were looking at technicals. And sometimes as retail investors, you get super frustrated. So what we're really seeing right now is this battle between your Wall Street institutional investors who are looking at the fundamentals at GameStop. 2019 loss in revenues, closures of stores. Revenues in 2019 plummeted. They've been slightly flat for 2020 thanks to work from home, the pandemic, and more people picking up gaming. But they're the retail shop, and most people are transitioning, getting their games online. So of course, you can't blame these institutions for going 130% of the floating stock in short positions. The fundamentals are just not there for GameStop. Now, that being said, you have a lot of loyal fans. You have a lot of loyal gamers who now have access to platforms like Robinhood, where it doesn't cost you anything to trade. And so you're seeing a lot of retail investors buy into A, things they know, B, things they love, and when they hear good news like last week with GameStop, that Ryan Cohen, founder of Chewy, is now on the board of directors, the euphoria grows because you look at his background and what he did in the pet industry and the amount of money he's made. There's a lot of confidence in GameStop now that potentially this person can come in and really steer this ship in the right direction. Now, of course, for institutional investors, sure, good move on the board, but it's going to be wait and see. And in the meantime, operations are still not going to improve that much. So that's why you're seeing a big short position. But now you got that going up against the retail investors who are loyal to the GameStop brand, and they are just kicking the shit out of these short sellers. And what's worse is, as this continues to go up, these short sellers are going to be forced to cover their positions. I don't know how many brokerage houses are going to continue to allow these shorts to hang on for some potential, rebound downwards for this stock. So what I believe is happening today is twofold. You have continued purchases from the retail investors who are in this frenzy on Reddit, trying to take down some of these short sellers, mainly Citron, who attempted to have a webinar on this last week, but apparently got hacked by these loyal fans who didn't really want them to come on announcing that really GameStop should be a $20 stock. So it's a wait and see. If you just look at the fundamentals, even on the revenue basis, it's just not there for GameStop. And in fact, the only reason why they were slightly up revenue this last quarter was because of the new game consoles that came out, and they got better than expected sales. And that may carry over for the next couple quarters, but after that, then what? So the big hope is, can Ryan Cohen come in and rebuild and retransform how GameStop offers its services and the products they sell to its customers? And of course, The retail loyal fan base, very positive on that. Not so happy on the short seller side. They are losing their shorts, trying to cover their positions on this. So you're going to see this fierce continued battle. And as of recording this video, it looks like trade halt has been lifted. At the halt, they were at about $56 a share. It's now jumped up to about $60. So look for it to stay a little bit flat. I'm going to stay out of this one because who knows what's going to happen. Clearly, the fundamentals are not there to support the share price, but you have a lot of retail euphoria behind it. A, battling the institutions and the Wall Street shorts, and B, some positive news of some potential rebound for this company in the future. Wait and see. This is more, for me, this is like a movie. I think I'm just going to sit back, have some popcorn, and enjoy the show. Leave your comments down below. I'd like to hear from you about what you think about this whole GameStop drama, and what do you think is going to happen to the GameStop stock next week. All right, guys, remember, always be learning, always be investing. I'll catch you in the next video.